Hi guys, welcome to the last video of the market profile series. So in this video I take a case study and put all the concepts together that we have seen in the previous 9 videos. For the ease of understanding, I have outlined 3 steps. The first step is stage analysis. I'll come back to this in a moment. Step 2 is all the 5 steps that we have discussed in video 9. Those actually come under step 2. And step 3 is a period of consolidation, post which we actually enter or exit a trade. So let me come to step 1 first. Stage analysis I have discussed in one of the videos that I had posted. If you don't recollect, I would ask you to pause this video right now and go to Google and just type stage analysis and have a look at it. Stage analysis is nothing but the various stages that a stock goes through, and if you're a trend trader, is actually extremely essential that you only participate in trending phases of market, and when the market is consolidating, it's always better to step out and wait for a clean breakout. So in case you're using these techniques to buy a stock, it is always to your advantage if you select those stocks which are actually coming out of a long period of consolidation or correction. This sort of correction or consolidation should be visible on the higher time frame charts. Step 2 is nothing but all the 5 steps that we have discussed earlier. It just looks at individual profiles. You have to classify individual profiles as bullish, bearish, or neutral. I'll come to that segment in a bit. And then we look at how the value area is moving, what the current profile's opening is with respect to the previous profiles. At the previous profile's value area, we need to determine who is in control, whether they are buyers or sellers. So step 3 is when we see most of our profiles overlapping one another. In short, when we see a consolidation happening in the market, then we wait for a signal. When the price deviates from value area, that is when we enter the trade. So these are just 3 basic steps you have to follow. The example that I'm going to take up, obviously I have the benefit of hindsight. I have cherry picked that example. But if you go through your charts, after what I show you, you'll find many such examples which exists, and you can apply it on your favorite instruments as well. My preference actually is to apply these concepts on low beta stocks. I somehow feel that from a positional point of view, low beta stocks tend to do better. This is just from positional trading aspect. I don't want to comment on short-term trades or on investments per se. So the first thing that I want to show is how do you classify a profile as bullish or bearish or neutral. Now I have discussed these concepts in my previous videos as well, but I'll do it once more. So let me first introduce you to the chart here. This orange part that you see is actually the opening of the profile, opening price. The red triangle that you see is the closing price. The green area that you see is actually the value area, and the pink line that you see is point of control. Okay, so let us look at this profile. So this profile is opening within the value area of previous profile and closing within the value area of previous profile. It is not conveying any new message since the previous session. So this profile becomes a neutral profile. All right, look at this profile. This profile opens within the value area of the previous profile, and the price closes below the value area of the previous profile, right? So this profile is classified as a bearish profile. Now within a bearish profile, you can have 2 more subcategories, average bearish profile or a super bearish profile. You can pick out any name you want to. So what is the average bearish profile? So I just showed you this profile, right? I mean, look at the range of this profile. It is not elongated. That means most of the action has happened within the previous profile, right? So this is just an average bearish profile. Now look at this profile. So this has opened below the value area of previous profile. It has got proper range extension. It is kind of long. There has been selling clearly visible, and the profile is closing towards the bottom range. So this is a much stronger bearish profile when you compare it with this one. Okay, yeah, so let's come back to this profile. So what has happened, this profile has opened below the value area of the previous profile, price has moved down, and finally the price has closed below this value area. So even this profile can be categorized as a strong bearish profile. So this is what I meant by classification of profile. It is always better whenever you're using market profile charts, try and classify each profile as bearish, bullish, or neutral. Now this helps you give a holistic view of what is happening in the market. So for instance, take this profile. Now what has happened? I mean, we've got a nice correction that is going on here. So what happens is after this profile we get an opening above the value area of this profile, right? In fact, above the whole profile's range. And by the time the price closes, it is actually above the value area of the last three profiles, right? Last three profiles means leaving this aside, 1, 2, 3. So in total 4 value areas has been surpassed in one session. So this actually becomes a super bullish profile. So if I want to take a trade, let's say in this profile, based on this profile, what I'll do is I'll keep a stop at this region, somewhere around this region, at the low of this profile, and I would go long. I would actually increase my position size if we can take out the value area high of this profile, right? So this is again a very, very simple concept. So the 3 things that you have to look out for is, where is the current profile opening with respect to the previous profile? What about the value area of current profile with respect to the previous profile? And individually, how does the profile look? Whether it is a average profile or a strong trending bullish or bearish profile, right? So here's one more example. So what has happened here? This was a truncated session, so I won't consider this. So let us look at what has happened here. The price has opened within the value area of previous profile and closed above the value area of this profile. I'm talking about this profile. So this profile is actually a bullish profile. Would I consider it as a super bullish profile? No. While the range has extended, but closing is actually within the value area of the current profile, right? So we want closing that is outside the value area, which suggests that during the day entire trading happened, bulk of the trading has happened in this range, but still buyers managed to push the prices towards the top end of the range, right? So let us look at this profile, see what has happened. The price has actually opened above the value area of previous profile, and it has closed top end of the range above the value of the area of the current profile. So look at how strong this profile is, right? So this profile has happened, opened within the value area of this profile and closed, clearly above the value area of the previous profile. Again, this is a bullish profile. Okay, let's come to this profile. It has opened within the value area of the previous profile, and it has closed well above the value area of the previous profile. So this is again a bullish profile. So this is how you go about simply classifying individual profiles in a market profile chart. Okay, and based on this you have to decide whether the prices are trending or not, or whether who remains in control. That is the most important question that you have to answer. So the previous 2 examples were of a trending chart. The first chart was trending down, the second chart was trending up. So this is actually a range bound profile chart. Now I want to show you something interesting here. So let us look at this profile, because we don't have a reference for this profile. So this profile has opened in the value area of previous profile and closed within the value area, right? So this is a neutral profile. Let's look at this profile. So this has opened above the value area of the previous profile and closed in the value area of the previous profile. So I would classify this as a bearish profile. So let's look at this. This profile has opened within the value area of the previous profile and closed below the value area of the previous profile. So this becomes a bearish profile. Now let us take a look at this. This has opened in the value area of previous profile, closed high. And this closing has actually come above the previous 4 value area regions, right? So this is a super bullish profile. So for a moment, let us assume that this part does not exist. So see what has happened. While price has remained absolutely at the same level, okay, it is just a few ticks higher, the entire sentiment of this chart has changed after 4 profiles. So what bulls are signaling here, or rather buyers are signaling here, that some strong other time frame buyers have actually entered this market, and that is why we have had such a strong profile. So while price has remained in a range, we get to know about the sentiment of the underlying, whether buyers are in control or sellers are in control, just by looking at individual profiles. So let us look at this one. So this opens clearly above the previous value area of a profile and closes above it. This is again a bullish profile. So this profile is opening above the value area of previous profile and closing above it. Again, it's bullish, and so is this. So if you consider even this profile, so this price is somewhere around this region, whereas price here is somewhere around this region. It's more or less the same level. It's not trending, but still, just by studying these individual profiles, you know that price is actually trying to move up, and this is actually the main benefit, if I may say, or benefit that exists by studying market profile. Okay, so let us consider this case study here. So we are going to see how a stock moves from what is a stage 3 region to a stage 4 region, then a stage 1 consolidation, and breakout into stage 2. Okay, now I do have a benefit of hindsight because this chart is clearly visible to me, but I hope you can see in the coming slides that it is not that difficult to visualize what is going to happen based on the information we have in the current chart. Also, due to the scope of this video, it is not possible for me to take up many examples, but I am open to any stock you want me to analyze. I would just require a 5-minute data of the last 1 year, and I would actually do it. So just send in those requests along with the data, and I'll take up those examples as well. So all the bearish profiles I've marked in these orange lines. The bullish profiles I've marked in the green lines, so that it's much easy to distinguish between the bearish and bullish ones. The profiles that I haven't marked are actually neutral profiles. Okay, so let's begin here. So hypothetically, let's assume that we have a chart. So how do we proceed from here? The first thing we would do is select a reference profile, and that would be this one, right? So let's take up this profile. What has happened here is that price has opened within the previous value area and closed above it. So this is a bullish profile. In this profile, the price opens above the previous value area of the profile and closes below it. So this becomes a bearish profile. In this manner, I have marked out various bearish profiles in this chart. So if you see, we have about 14 or 13 profiles here, out of which 8 profiles are actually negative or bearish ones. Price hasn't fallen that much, and this is where market profile gives you a lot of advantage. The price, let's say it is at this level, it is still at this level given we are at this profile, and still you can figure out, sellers are clearly in control. So let's take up this profile. So this profile has opened within the value area of the previous one and closed below it. This profile has opened clearly below the value area of previous profile and closed below it. This is again a bearish profile. I haven't marked it. This becomes a neutral profile for the simple reason that profile opens well within the value area of previous profile and closes within it. Now this is a bullish profile. If you see, this has opened above the value area of previous profile and closed at the upper range. Now usually you should take notice of such profiles whenever they get printed, but there's a distinct difference between this bullish profile and the one we have seen earlier, which is this one. So look what has happened here. The price has gapped up above the previous value area and closed well above it. Along with that, it has taken out resistance in form of many value areas prior to this profile. Whereas if you see what has happened here in the current chart is that while this profile is extremely bullish, it has not surpassed the previous value area range. Now this is where the maximum trading has happened. So if you want to entertain any long trades, you at least want this area to go. Okay, in a normal chart this won't be visible, right? In the normal chart, trader would typically place the resistance level at this high high level of the chart, considering it the swing high. But in market profile, you can easily see that the actual level where you need to put or mark the resistance is this area. Okay, so post this bullish profile, we open next day within the value area of that profile and close just about at the lower end of the value area of previous profile. So this profile again becomes bearish. So this profile has opened below the value area of previous profile and closed below it. This again is a bearish profile. This is a neutral profile. This is again a neutral profile. Now this becomes a bearish profile. It opens above the value area of previous profile and closes well into it. This profile opens below the value area of previous profile and closes well below it. So again, the price has not moved much. If you see these 1 2 3 4 5 6 7 10 11 12 13 14 profiles, in these 14 profiles price has not moved much, but clearly you can see the amount of time price is trying to auction down is actually far greater than 1 or 2 instances where price has actually tried to stage a rally, right? So finally we get a breakdown profile. This is where previous value area, this becomes a previous value area congestion zone, right? So price deviates from that congestion zone with momentum. Now the thing is, let's say we are currently at this profile. Do we take a short trade here? I would actually say no, because from this high I think price has already corrected about 7-8%. Now average short sell trade ranges between 11 to I think 16%, unless we are in a very strong driven momentum bear market, something like 08. So I mean, that is why short selling using market profile or any other technique gets slightly tricky, because risk reward is not in your favor most of the times. That is why you have to look at your timing has to be really good to catch a valid short sell trade. If I were a trader, again in benefit of hindsight, I would have actually shorted the market here, because this is the lowest closing that you get at taking into consideration the majority of the value area trading that has happened in this zone. But again, I mean, it's easy to say now because we eventually know how prices play out. In real time, it actually gets difficult. So this profile, these two profiles are again bearish. Value area is clearly moving down, and the prices have opened below the previous value area profile, value area of previous profile, and closed below it. This profile is actually a neutral one. Prices open actually below the value area of previous profile and close well into it. This is a bullish profile. This is actually wrongly marked as a bearish profile. This should be a mildly bullish profile because price has opened above the value area of previous profile and closed above it. The reason I think I've marked this bearish is because this was again a truncated session. So that is why I have not considered this as valid, and I have taken this profile as reference for this one. Now this profile is again a bearish one. The price opens into the value area of previous profile and closes below it. So this becomes a neutral profile. So I mean, if we are here at this stage, there is actually no reason to buy into this instrument, because there is absolutely no evidence that any sort of buying activity is happening. In fact, value area is steadily moving down, and we can see that most of the profiles are actually they're having a range extension on the way down. and the buying power is at this stage, buying power is actually completely absent. So okay, this was the last profile of the previous chart. So what has happened after that is that the price has opened in the value area of previous profile, and it has auctioned lower below the value area of previous profile. So this is again clearly a bearish profile. Following this, what has happened, we get a neutral profile, and that is this profile. Now look what has happened here. Price has opened well above the value area of previous profile and closed pretty strong. Now again, I would like to take you back to one of the charts that we saw earlier, and that was of this profile, which is clearly gapped up below the previous profile and closed well above the value area of at least 4 previous profiles. Such profiles, you should take notice of. So if you see the current profile, so what has happened is this profile has opened well above the value area of previous profile and closed pretty strong. Now it is closed almost above 1, 2, 3, 4, 5 profiles, major trading area. Okay. So hypothetically, let's say we are here and we don't have these profiles printed. Do we take a long trade here? I would say no, because see, what has happened is there's no decisive closing above this range. Okay, so I would still wait. Actually, we do get a decisive closing in the next profile. So this profile is actually a valid long trade profile. But at this stage, I would actually still be conservative. I would definitely take note of this profile because this is a pretty strong profile that has been printed. Also, do not forget that we have transitioned in the previous chart from stage 4 to from stage 3 to stage 4. So from stage 4, we have got this sudden reversal. So typically such reversals you should trade. But obviously, once all the confirmations that we have discussed about in the previous videos, those have to fall in place. So we get a bullish close in this profile. I mean, the close that we have got here is actually above the value area of about previous 7-8 profiles. So this is enough to take a long trade. Again, coming to stops, if you take a long trade here, your stop loss has to be this region. It cannot be one particular level, but you can mark out this zone and this would be your stop loss, because some good amount of trading activity has happened in this area, and in this region. So this region becomes your stop level. A normal chart would actually show the lower low here. I mean, this would be a stop loss level. This is actually, I mean, you should not be keeping such lower lows as stop loss, because usually the candle or the bar that gets printed when this is taken out is actually a pretty deep one. So it's always better to exit early than to unnecessarily take more drawdowns. So this profile has opened above the value area of this profile and closed below it. So this is a bearish profile. Next day we open below the value area of previous profile and close well above it. It's a very bullish profile. Same goes with this profile. So we have opened above the value area of previous profile and closed well above, above it. This becomes a neutral profile. So look what has happened. As we have transitioned down from stage 3 to stage 4, now we have transitioned from stage 4 into stage 1. Okay, so here the price is again in a range, if you see, but the bias has clearly shifted on the upside. Now we have 1, 2, 3, 4, 5, 6, 7 profiles that are positive, whereas just 1, 2, 3 profiles that are negative and 2 neutral. So bias has turned bullish. Do we go long here? Yes, we do, but we don't take up aggressive positions, because still we don't have a decisive breakout, right? Obviously, if I show you the next chart, see how prices have rallied, but this is again in hindsight. If I were here, I would actually take a long trade, but I would initiate only, let's say, 30% of what I intend to take. And I would add to the trend or add my positions as trend continues, or as price confirms for the strength. So these are the last two profiles that were there on the previous chart. So look what happens. We get a huge trending profile here. So while price comfortably opens above the value area of previous profile and price auctions higher, it actually closes somewhere in the middle. So while a candlestick chart would somehow reflect this, I think, as a doji, if I'm not wrong. I mean, a long candle and a small wick. I think that is what it's called. It's called a doji, or I don't exactly remember the name. It's a cross pattern. So while that pattern would be visible, or we might get a small body also. So while that is a indecisive candle, actually in market profile you would take this as good strength, because this profile is actually gapped up somewhere here, and it is clearly above a well-defined value area range. Range extension has also happened on the upside, so this is typically a good region to go long. So the next, add to your existing long positions. So the next profile, what we see, it gaps up above the value area of previous profile and closes pretty strong. Now sometimes you have to be sometimes you need to imagine a bit. If you combine this profile and this profile, you actually get a solid trending day profile. Just map this profile with this, you'll get a solid trending day profile. So the picture then changes dramatically. So this is where your visualization comes into play. You need to combine two profiles sometimes just to see the overall texture of the market, whether it is bullish or bearish. Even if I don't have this profile for me is extremely bullish. Let's take up this profile. So this opens within the value area of this profile and closes higher, again a bullish profile. This one is a bearish profile, because the range extension is not that much, so it's a very mild bearish profile that you can say. It opens in the value area of previous profile and closes below it. Now again, if you combine these two profiles, you would just have a neutral profile, because then what would happen is the prices would open somewhere around here and close in this profile region. So sometimes you got to be imaginative and try and combine two profiles to see whether the same thing exists, or some new information we can get. So following this bearish profile, we get a bullish profile again in the direction of trend. So this profile and this profile are range extension that is happening on the upside. Post this, we get many neutral profiles, right, along with a couple of bullish ones, and then we again get a breakout. The actual chart actually moves up another 20% from here. So if you see, if you're somewhere around, let's say, this region, you just count number of bullish profiles you have: 1, 2, 3, 4, 5, 6, and 7. Whereas you have just one bearish profile and about 4 neutral profiles. So this is how you have to visualize the the future profiles, just by looking at currently who remains in control, whether they are buyers or sellers. So I haven't completed this chart. I haven't posted further, because I just wanted to demonstrate how important it is to be aware of the stage of a stock, trying to classify individual profiles as bullish, bearish, or neutral, and then fit everything into a overall picture. Again, while here most of the whether be it candlestick charts or bar charts, it would have been difficult to point out who was in control, but through market profile it's pretty easy to judge that. So I'll just sum up some key points. See, whenever I'm trading through market profile, my first step is always a stage analysis. So if you see a good solid company that has corrected a fair bit on higher time frame chart, be sure of it that a trending move in the direction of long-term trend, let's say the broad market direction, trending direction is up, you would see that stock eventually moving up, and these concepts would be extremely helpful there. I would rather suggest that in the beginning you try to apply these concepts only to buy stocks. Short selling is tricky. If you're really interested in short selling, I would say that try and apply these concepts in put options. I think that would work better, because usually when you get a short sell trade, the risk reward ideally is not in your favor. That is what I've experienced. Also, I would add that like I do have extensive knowledge about fundamentals as well. I'm well aware about many valuation concepts. So at times when you know that a sector or a particular stock valuation wise it has got attractive, again these concepts can be used there. Awareness about valuation along with stage analysis is actually an extremely powerful tool. It is very underrated, but if you just research a bit about combining valuation and stage analysis, I think about 60 to 70% of your decision making would be finished there and then. One more point that I have to add is this concept of sister stocks. See, if you identify a stock that is shaping up well, and through market profile you identify a buying zone, try and see other stocks belonging to the same sector. If same stocks, stocks belonging from same sector exhibit the same pattern, so that is a high probability trade, and you should go and pick out a long or short trade, whatever signal comes by. So this concept of sister stocks is actually it's been there are a lot of books about it. I think this concept was introduced to me at least for the first time when I read a book about Jesse Livermore. I'm sure most of the traders have read that, and this concept actually appeals a lot. I've actually researched a lot on this subject, and I found that in a sector most of the stocks actually move in one direction. So it's obviously a good thing to get confirmation other than market profile concept. So before ending, I would just say that whatever framework we have discussed here, it is not predictive in nature. And this particular video, that the last one, is more from a trending perspective. It is not a hit and run sort of a trading technique where you just enter a stock, take some profits and get out. I'm more interested in catching long-term trends because it is easy on my psychology at least. If you want me to do a video on let's say a high beta stock which moves from one low volume node to a high volume node, and if you want me to show you how to catch that, I can do that. But again, I would have the benefit of hindsight. The most important thing that I would actually put out of all these 10 videos is the concept of classifying individual profile. So do not underestimate classifying individual profile on a chart. Yes, everything is subjective and everything has to fit into a context, but as I've shown you in just one case study, if you analyze individual profiles well, classify them as bullish or bearish or neutral, you do tend to know the bias of the market. In the end, always wait for the trigger. Sometimes even after knowing the bias of the market due to some event or some global news, the price actually moves in the opposite direction. So that is also a signal to take a trade, but do always wait for confirmation. There is one concept of taking notes 2 times. I usually during weekends when I'm going through charts, if I like a chart, I take notes on that chart on Friday or let's say Saturday. I again revisit that chart on Sunday and I take fresh notes on it. Actually, that has always helped me, especially in market profiles, because during the first time I'm not able to see things that I do see when I take notes the second time. So that is something you can practice. It really helps. If you guys want, I'll post more case studies. If you want me to analyze a particular symbol, I would actually request you to send me last 1 year data, just 5 minute data of the last 1 year. I would actually do that. That would also be current a very recent chart. So that would help us to track whatever happens to that particular instrument in real time. So that would be a great exercise. So in case you want, you do get in touch, and I'll definitely try and put up a new case study. So this is not the end of my market profile videos. I will keep making different case studies as and when I take up a trade. Currently I am tracking one symbol that I am trying to trade through this technique. In whether I am successful or not in taking up that trade, I will definitely post about it in a couple of weeks, in a similar fashion where it's easy to see how an individual profiles or collective individual profiles determine in which direction trades should be taken. In the end, I want to thank all of you who have spent their valuable time watching my videos. This 10th video has come out after some 2-3 years, and I'm extremely sorry for it. I was busy in other ventures of my life, but I'll make sure that this continues going forward. Thank you.